time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein is here to take us through the charts, and here to take us through the trades is Don Kaufman, co-founder of TheoTrade. Ben, Don, thanks so much for joining us. Don, we'll start with you. Before we get to your actual trades, want to get your thoughts on this week's activity. We have, of course, had new closing highs for the S&P 500 and the NASDAQ yesterday. They're building on those records today, up modestly. What are you thinking?
Yeah, pretty shocking. This market just continues to find a way, like literally one stock at a time. Obviously, lately it's been Nvidia, but hey, this week, look, purely belongs to Tesla. Both yesterday and today, really the driver not only behind NASDAQ but behind the S&Ps as well. As I said, market continues to find a way higher.
Yeah, and Tesla really up 23%. Just this week alone. But we're going to talk about your first trade, and that's a big winner this year. That's Eli Lilly, actually under a little bit of pressure right now, down about 1.7%, but very close to those highs, up more than 50% year to date. And I'm used to you being a contrarian, but you're actually bullish on this stock that so many others are bullish on as well.
Yeah, I am. I'm not ready to exactly fade the move here inside of Lilly just yet. So, yesterday it looked like kind of a key reversal. Today, it's a very minimal pullback, but at this point, it's still too early. I think it's still opportunistic to hop on the bullish side of this train because it does not appear to be stopping. And with the earnings coming up kind of in the mid-August timeframe, I just want to ride the underlying until early August. Bail out before the earnings. Again, maybe a little bit of buy the rumor before that earnings announcement. Nevertheless, I mean, look, Lilly's moved from the 750 now up to the 900 level. As I said, I'm not ready to fade it. I'm going to get bullish. I'm going out to the August 2nd expiration. Again, the August 2nd expiration, I'm going to be buying the 935 calls, selling the 940 calls. So it's a $5 wide call spread. This one's done for about a $2 debit. It's very straightforward. We get a little bit more of a pop to the upside. The trade wins. Again, we're getting out of this prior to, of course, the next earnings announcement.
All right, so Ben, Don's not ready to fade this move quite yet. What does the chart show you?
Sounds to me like a straightforward trade, Caroline, for a straightforward trend, right? You mentioned that what so many others, you said, have been enjoying the bull side of this trade. And Don, you're not alone. And I've got good news for you. Jerry Parker from Chesapeake Capital, one of our regular guests on the Future Show, actually, he called this trend the best trend of all time. Now, Jerry, he's, Don, Caroline, he has seen a lot of trends over his time. So I called him out on that. I said, really, Jerry, the best of all time? And he said, okay, one of the best. But let's take a look at it. Caroline, first and foremost, the more granular intraday price activity, because you mentioned we're coming off a little bit here today. So just off the recent highs of around 918, back down below that 900 threshold. A little bit of a chop, no real well-defined conviction here on this 30-minute candle chart to look at the last couple of weeks of price activity, but step back and you're going to see this is really where you open up the door to seeing what I like to look for: bottom, left, top, right, easily identifiable trend here where the bulls are in control here, right? There's no mistake in the direction of this one. It's headed up, simply put. Let's take a step back because I want to show you what's going on with the daily candle chart here. This is where, again, I really look for these areas of consolidation, the vertical separation, the well-defined trend up. It all plays in here with LLY. It is in a very well-defined trend up off that 2023 low around 300. Above 830 to begin the week in a breakout phase, seeking value higher. Let's keep an eye on this one because this one has some legs, conviction, energy. Hey, everything the bulls are looking for here, simply put, guys.
Yeah, and it's interesting because Wall Street analysts are still bullish on this name. If you take a look at the breakdown, the majority are in the buy camp, but the median price target's 880, so quite a bit lower than where it's trading right now. So it sounds like maybe there needs to play some catch up from the analysts. All right, Don, let's talk about your next trade, and that's Intel. Quite a bit different of a performer this year, down almost 40% year to date. What are you thinking about that one?
Yeah, chip demand is still largely in question right now with what could be possibly a slower economy. But look, AI is all the rage, and Intel just doesn't feel like they're in the center of that. So right now, Intel has been holding in and around the $30 support, which Ben is going to show you momentarily. And it has been absolutely unequivocally flat at that 30 level. I think we're actually going to see Intel crest under the 30 and actually go down to what has been an older support level, which is 25. And as such, I'm going to trade it for exactly that, but I'm going to give myself ample time. I'm going to go all the way out to Intel's September 20th options expiration. I'm going to be buying the 30 puts. Again, buying the 30 puts, selling the 27 puts. So being that it's only a $30 product, I'm just going to do a $3 wide put spread, right? Buying the 30s, selling the 27s. The trade is for a $1 debit. It's a nice shot to the downside if you believe between now and the September expiration that we are going to crack through that 30 level, which looks very, very reasonable with, as I said, that old support of 25.
All right, Ben, walk us through the chart. Something tells me you're going to look at the 30 level.
Look, first and foremost, it's a more granular, very similar situation in terms of what we just had going on with Eli Lilly. A chop, right? Not a lot of conviction here one way or the other on a 5-minute candle. So I just wanted to speak to the difference between the horizontal phase and that vertical phase, which we'll get into in just a second. But hey, simply put, we are in a bit of a range here. 31.20, we'll call it right now, slightly higher on the day, but well-defined upper, well-defined lower extreme. 31.50 down to around that 30.20 level. Stepping back, you can see this is where we start to see some of that conviction, as I mentioned, which you can see easily identifiable separates those two phases, right? Where you break down and then you get that horizontal development where you accept the new lower level. And even as I look at this chart here, look, this pattern presents itself. I don't want to pull out the fine-tooth comb here, but I mean multiple times here. You can see, again, high conviction, consolidation, wash, rinse, repeat, a staircase type pattern, trend lower, bouncing around 31.50. Taking one more step back, I just wanted to show you this selling we're seeing here. Remember, we were talking about kind of a chop on the intraday after a double top that formed going all the way back to the spring of 2020. We're talking beginning of 2021. Stock's been coming under pressure, but I do want to point to, again, most recent lows still holding above lows here. That was back in October of 2022, beginning of 2023. And even as I look here, recent highs fell short of, again, those are the highs from, when was that? Up around the beginning of 2022. So speaking of kind of range bound and contained and not a lot of conviction one way or the other, it seems like, again, after that big move lower, it's been mostly just that.
All right, Don, your final trade is Lowe's. Lowe's is another underperformer this year, although not by all that much, only down about 4% year to date. So seems pretty modest compared to Intel. Talk to us about this final trade.
Yeah, inside of Lowe's, look, the interest rates, which is higher for longer, appears to finally be having a substantial impact to home improvement and the home builders for that matter. You can see some fairly strong sell side activity starting to hit that market. And as both Ben and you are very aware, I do like my bearish positions. So in Lowe's, here again, I'm actually hopping on trend for, precisely the reason that you were just mentioning is, all right, it's down 4%. There could be some room for improvement, if you will, to the downside on this. So demand seems to be waning at this point in the area, both Home Depot, Lowe's, but Lowe's really looked like the more effective candidate in terms of the technicals here. So I'm going to go out again to the September 20th expiration because when I'm going to take a bearish shot, I want to give myself some time and a little bit of distance for this product to move. So the Sep 20 expiration, I'm going to be buying the 200 puts, selling the 190 puts. So this is a big spread. It's big $10 wide spread. This is being done for a $1.90 debit right now. So yeah, you got me here. Two bearish trades. I mean, in this marketplace, you're either in or you're out, and it's either big tech and you're in, or everything else seems to be on the outs. And well, Intel is on the outs, Lowe's on the outs, and most of the home improvement is on the outs right now.
All right, so Ben, room for improvement to the downside. How's that for a bearish call? What are you looking at in terms of technicals?
When we are together on all three of his trades, and this is going to be one of those instances, Don, where I'm going to leave you a little bit disappointed here because I have to agree with him once again. Some of the recent weakness we've seen here, the stock's under pressure, simply put. Let's take a look first and foremost at the rally. We've seen short-term, more intraday price activity all the way up to 217. But look at that holding, having a hard time holding on to that upper level. So leaking lower. And this is kind of a generous way of looking at price activity. You could sort of view this as two separate areas of value if you wanted to. Still holding above 212, 213, 212.80. 213, which I think is a key level. But take a look here. This is where, as we step away from that 1 minute in more intraday time frame, step into a 30-minute candle chart, you're going to see that the stock has come under pressure. We were balancing up around 227 just a couple weeks ago. Again, high conviction separates that horizontal development. That vertical phase is the market in this instance seeking value lower. What happens? We find it because we transition back into this horizontal phase where we're more overlapping and rotational. This is, again, as I like to think of it, the market doing its job. It's efficient here. It's bringing together the buyers and the sellers. This phase right here is very inefficient for the sellers. They're having a hard time getting their price, right? Whereas the buyer, all he has to do is just put a bid in there and he gets hit ultimately. Here again, kind of more, it's both the meeting of the minds in some ways, I like to think of it. Once again, you transition to the vertical, horizontal, and here you see a staircase type pattern playing out, which is establishing a trend to the downside. Now again, it's a 30-minute candle chart, so we're not going to put too much weight into that, but here you can see a chart that, again, kind of another example, not a lot of conviction one way or the other, but contained, range bound. The one thing I'll notice here, though, is we did recently take out those lows with that move ultimately, and the other thing I'll take note of is once you break through the middle of a range, we've got a well-defined upper extreme here around 265. We've got a lower extreme down there from around October, November of last year, and that comes into play down around 180, 190. Get through the middle, Caroline, oftentimes you open up a door for a retest of that lower extreme. So we got a couple time frames here suggesting and kind of supportive of that bearish narrative here, even within this wider range that we remain in.
All right, so you guys are in agreement. Ben Lichtenstein, Don Kaufman, thanks so much for being here. Appreciate your insights.